Investors and traders, welcome to the channel Market Chart. And today is 1st of September 2024. I hope everyone is having a great weekend. Hard to believe, but it is the 1st of September, so we have actually progressed quite a bit and moving towards the end of the 2024. Fantastic, isn't it? As always, this video is for educational purposes only and it's not a financial advice. We will be taking a look at the key US stock indices in this video, and we'll also try to take a quick look at some of the sectors as well. So just to cover the timing model, here we do have our timing coming in fact it started from 29th of August, and we have a window between 3rd of September. Usually the timings have marked a turn in the market, but the market remains strong, which could actually indicate that there are actually longer term cycles which are pushing the market higher. And what we could in fact see is, if this remains the case, during this period we could actually see the market accelerate higher, and that would be because we could see the shorter term cycles inversion, and the longer term cycles actually taking over. With that, let's also take a look at the Japanese stock index, which is the Nikkei 225. Here we can see that this market is also very strong after having on the 5th of August making a low. It was a really quick move to the downside. We do have some timing coming in based on cycles, 5th of September and then 19th of September, but you can see that the market is above the 50% mark of this entire decline. So in my opinion, it is strong. It is moving towards this 31st of July swing point, but if the market remains strong, then the chances are it might actually move and challenge these highs. That possibility remains there. Okay, so now we'll move to the US stock indices, and let's actually start by taking a look at the S&P 500. This is the daily chart of S&P 500, and here we can see that the market has actually been trading in a trading range for quite some time, ever since the 21st of August. So it is very close to forming a new all-time high on the cash basis. In the Dow Jones Industrial Cash Index has already done that. I believe even the futures did that recently. We'll actually confirm that when we take a look at the futures charts. So what we can see is that here, unless this bottom of the range is broken to the downside, the chances are it's gonna move higher. We have higher targets as well. You can have a look at this big ABCD drawn right here. In fact, I'm gonna move to the weekly chart where it's a little bit more clear. So first of all, look at this nice trend line in blue. It's just intact, and here we go. What the possibility is that what the market could do is perhaps complete this blue ABCD, and then we have the smaller ABCD in black, and then the big ABCD in this black color ABCD mark around here. Anywhere between the 5,915 to 6,110 is the kind of the target where the market could actually accelerate, or rather accelerate pretty quickly. This also happens to be an election year, and we are in this. We have got like September now. We are in September. We've got October, and then we have got the elections coming up in November. So and then we also have the possible rate cut coming in September, as well as the Fed chairman has announced. So quite a lot of things were happening for the stocks in the US, and the market remains strong. So we could have these upward targets being met. Now NASDAQ had actually completed its big ABCD. S&P 500 did not, and where we found pretty good resistance come in was at the 1.618 expansion of the entire 2022 bear market, and then we saw about nearly a 10% decline and about 17% decline in the NASDAQ 100 futures. Okay, so this is what we are looking at in the cash index for the S&P 500. And if we move over to the futures, here we go. Futures are also very close to the high which came on the 15th of July. We have this big ABCD in black completing around the 6,100 roughly. Smaller other ABC cycles are also a little bit higher. So again, this ties in line with the cash index. So we could see actually new all-time highs coming in the S&P 500 futures as well as the cash market. Now let's take a look at the NASDAQ. We'll take a look by taking a look at the futures market. Here we go. So this is the big ABCD completed right here. Here we go. Right at the 1.6618 expansion of this BC swing, then we saw about a 17% decline in the market ending on the 5th of August, and now it has retraced right to the 61.8% retracement. It's just hovering around that. So the chances are that we are going to see more of a trading range behavior for the NASDAQ. It might actually go and test the 78.6% retracement in that ballpark figure. I do think that the 5th of August low is actually a really important low, and I don't think the market, especially the S&P 500, is likely to breach that moving into November of this year 2024. We could see perhaps a trading range behavior take place, but I think the 5th of August till the November timeframe is an important low in place, and if that goes, then that means that, okay, really be very, very careful in the stock market. So here, expecting a trading range behavior, maybe up to 78.6% retracement around 20,210, hovering in about that region, because of the completion of already completed ABCD pattern right here. Now let's take a look at the Dow Jones Industrial Cash Index on the weekly chart. Here we go. Look, this one looks pretty, very actually. This is the industrial average, although the stocks are not necessarily related to the kind of old Dow, which was mostly concentrated towards the industrial stocks. But look, it's pretty strong close on the weekly. It has taken out the highs of that was the high of 41,376, and last Friday was 41,585. So actually made a new all-time highs in the cash index last week. We have this bigger ABCD, which could in fact, is pointing towards 47,500 roughly. Not entirely sure whether we could actually get there, because that's quite far away. But this market has been pretty strong, so maybe that sort of possibility exists there. If we were to just take the 1.618 expansion of this entire 2022 bear market, so the 1.618 expansion comes around 42,560 on the cash index. So that's going to be the shorter term target, which the market could in fact achieve next week. And moving beyond that, the possibility of this bigger ABCD could actually come into the play. That would be really interesting, because that is something which we have already seen, this big ABCD, since the COVID lows of March 2020 completed in NASDAQ. If S&P 500 will be able to do that, then Dow will be another index, which will be able to accomplish that. So that means that a lot of these indices will be coming into their pattern formations. That will be a really interesting scenario should it take place. And now let's move to the futures chart. Here we go. On the futures, what we can see is, let me have a quick look. 41,672 was the high, and last Friday 41,682. So on the futures chart, it actually just took out the high of 15th of July this year, only by about 10 points. But the cash index is slightly different, so the cash market is stronger. Now, the really interesting thing is where the market closed, pretty much where the market closed last Friday, is right at the 1.272 extension of this projection of this AB swing from point C, and just above that around 41,983, and I think this is where the market is likely moving to next week, is the 1.618 expansion of this BC swing. And above that, we have higher targets of 44,123 and the big ABCD completion around 47,200 or 47,300 roughly. So it all depends how the market will be able to, how quickly it's able to, with what sort of power it's able to get above the 1.618 expansion of this big BC swing, and that could in fact give us further targets. But if the market is able to complete this big ABCD, it's going to be a really interesting scenario taking place. We'll find out soon whether market is strong enough to actually, it does look pretty strong. What force what kind of force is able to get above the 42,000 level, roughly speaking. Now let's take a look at the Russell 2000, because this is the something really interesting here. So a lot of things which are taking place is of a rotational aspect into the market. I have actually done a video about a month ago now. It's titled the Great Rotation is Here. I would encourage you to actually watch that. I'll put a link to it towards the end of this video. And what we are seeing is basically the interest rate paradigm is actually changing. So over the course of last 18 months or so, couple of years nearly, we have been in a rising interest rate environment. And in fact, the interest rates in the United States went up really quickly because of the efforts by the Federal Reserve to fight inflation. So these are at the kind of levels that we have seen recessions kindly come in the past, being let's say 2006 and 7, even the 2000. So I believe the Fed is actually aware of these, and these remain quite highly elevated in terms of the interest rates. So the Fed is actually really carefully watching the unemployment figures. So maybe they have a lot of room to actually move aggressively and make the rates go down aggressively. That they have room before they could even embark on something like a quantitative easing program. So what we are seeing is that the small caps, which are smaller companies, their cost of doing business, because of the money they borrow and the interest they have to pay on that, if their cost is going to go lower, that would eventually lead to higher profits, meaning better earnings for these kind of stocks. So we are seeing some sort of a rotation taking place, where money is moving out of some really high flying tech stocks and moving into some of these small caps, and the small caps could in fact do pretty well. So I have now it really depends upon two things. This point B is where we had our targets. The target was met. In fact, the target was in this window here, and if it is able to breach above that, then we have the all-time highs coming in from the November of 2021. That's going to provide some structural resistance, but we have the ABCD completing the small blue one around 2,675, and the bigger one is above that. That's going to be nearly 3,000, where we have the 1.618 expansion of this entire BC swing, and a little bit higher will be the ABCD. But the key point, the key test will be if this market is strong enough to get above, which I think is more likely scenario, that the small caps are likely to perform really well. The really big test will come around the 2,680 mark, because that is the 1.272 expansion of this BC swing, and then we have the ABCD completing the small one in blue nearby. And that whenever we have a confluence of two or more patterns or ratios coming together, that is always a area of interest for us, which we pay really close attention to. It's a target for us, but it could actually also turn into a pretty strong resistance. So we'll have to wait and see whether the market is strong enough to break above that, and that would actually lead to higher targets. But for now, what we are looking at is on the break of 2,320, structural high 2,455, with the possibility of market marching towards 2,680, which is likely to be pretty strong resistance. So we'll wait and watch and see what the market is likely to do, and what sort of price action will bring for us. Now let's take a quick look at some of the sectors as well. So here we go. This is the Philadelphia Semiconductor Index. So this includes stocks such as Nvidia, AMD, chip-related stocks. And there's something really interesting here is that it has actually completed its big ABCD, where the CD leg is actually 1.272 times the AB swing. So the last time we had done the analysis on this, the ABCD was completing around here, and then the market found a support around the April lows, and then went and extended to 1.272. Then we also have the smaller ABCD completing around here, and even if you were to do Elliott wave analysis, which on the channel I do not do, but we can have some really simple wave structure. This could be a wave 1, wave 2, wave 3, and possibly wave 5 is completed around here. And then we saw a pretty good correction Let's take a look at how much this correction was. There you go. That's bear market. That's 27%, and then it just stopped around the between 38.2% retracement of this point C to point D, and 61.8% retracement of this 30th of October 2023 lows to the highs of 8th of July 2024. And I'm using the weekly chart, so these are the weekly highs and lows. And now what it has done is it has just retraced just I believe around 61.8% retracement. This is what it has done. This pattern is very similar to, yeah, it has done 61.8% retracement. It's very similar to what the NASDAQ 100 index is doing. And we know that NASDAQ 100, it's the NVIDIA stock, I'm just going to take a look right now. You know, it has those kind of really high flying stocks have been really the key in moving the NASDAQ 100. So one of the things about the semiconductors is, and I did a video about it, I'll try to put a link towards it for that video. In that I had actually shown you that I did a ratio between the semiconductors index and the NASDAQ 100, which is a more broader index. And one of the things that we have looking at that, one of the things which we uncovered was that there is a cycle to the semiconductors, and one of the things which came out of that study is that it appears what happens is that the semiconductors are just like for example bricks which are used to build a house, and once the house is built, then you know people can live in it, people can use it, and that has more longevity in the sense that it is reusable, it could be extended, more structure could be built on top of that. So I'm looking at the semiconductor stocks in a similar fashion. Maybe my analogy is very simple or a little bit crude, but the semiconductors for the artificial intelligence stocks such as NVIDIA, they have done a lot of work. They have actually provided those kind of bricks which are doing all the heavy work for you in terms of data manipulation, data mining, and machine learning algorithms are able to actually use these GPU powers and do a lot of work. And then other companies which are actually have perhaps user data, they are more of a user of artificial intelligence who are actually able to use this technology. Now they are kind of taking over because now they have got kind of the house built for them, and now they can actually take over and basically extend it. So I think what we'll begin to see is some of similar such stocks which are actually able to make use of artificial intelligence using these building blocks will actually begin to perform really well. So with that, let's take a look at the NVIDIA. Here we go. So I'm gonna move back to the daily chart. So when we took a look at the NVIDIA stock last time in our segment for the tech stocks, we had really two scenarios, and one of the scenarios was that because the price was really hovering at the 78.6% retracement and the 1.272 expansion nearby of this swing, it was a pretty strong resistance level. The scenario was that either the earnings are so good that we actually close above, which I'll show what could happen, the pattern that we were watching, and the other scenario was that it was really strong resistance and the market actually closed lower. So this scenario has taken place where the resistance has proven to be way too strong because of the combination of these two ratios coming together. And what the market has done is it has retraced 38.2% retracement, nearly there in my books, is just close enough. And the level has been at the low 116.71. The 38.2% retracement comes at 115.65. So close enough. Now what is really important for the NASDAQ is to not actually close below this, because closing below this 38.2% retracement then open up several levels lower, and one of them is like there is a really small gap, but there is a gap right here. Here we go. So the market could actually move down to about 111, 110, close this gap right here. And then if the market still remains weak, we have this ABCD pattern, and then the breakout around 75. So 80 to 75 could actually become a possibility. And then of course we have this trend line. Once it moves below the trend line, then the move could be actually accelerated lower to complete the ABCD, or even test the breakout point around 75, 76 region. So really carefully watching Nvidia right at the 38.2% retracement. And as we know that this stock has so much weightage in the stock indices, especially the NASDAQ 100. Wherever Nvidia will go, so will the broader market. It's just NASDAQ 100, and also the S&P 500 to a large extent. And this is what we have seen, that although the S&P 500 is stronger, the NASDAQ 100 is kind of stuck around the 61.8% retracement. So that is one possible scenario. Now let's say if it is able to overcome this resistance level, then the other scenario is the completion of this pattern around 150 to 155 mark, and that will be a 3 drives to a top pattern. It will also be the ABCD completion, top of the channel nearby. So 155, possibly even if the stock is really strong, 170. But that's gonna be, in my opinion, the kind of the top range for the stock. So we'll have to wait and see what the market will do. Okay, so I want to show you this sector. This is the industrial. This is the weekly chart for the Spider Select Fund Industrial. So here I want to show you is if we take a look at, let's say, the tech sector. And I'll just show you QQQ. But here, look how strong this has been, and it's been just moving higher for the last 1 month. So 140 is the kind of target the industrial stocks can move into. So this is an example of the kind of rotational aspect, perhaps in the market, that money might be moving out of some of the mega cap stocks and moving into these industrial stocks, for example. And if we were to just take a look at the QQQ, this ETF, you can see right here, went up to 78.6% retracement, similar kind of a pattern to what we have seen in Nvidia. Nvidia also found a lot of resistance from the 78.6% retracement. Now let's take a look at the energy, XLE. Now the XLE is just sideways behavior, but still the energy remains strong. It's not far off from the all-time highs reached in June of 2014. So it just keeps on chugging along, and looks like it's just gonna move in this kind of trading range behavior. At one point we got bearish on the energy, but then it went and completed this pattern, several ABCDs, and this black one right at the 61.8% retracement, and now it's just stuck in a range here. So unless it breaks below that, I am neutral to positive on the energy sector. Now let's take a look at the financial. XLF financials have been really strong. Look, it's just off the charts. Here we go. I'll do a separate video about this one. So now I think it's gonna move towards our next target, which is gonna be 49, possibly even 50 on the XLF. Let's take a look at the KRE. Regional banks, I think good improvement there, and possibility of completing this ABCD target around here, around the 62, 63 mark. Then let's take a look at the healthcare. So healthcare stocks also doing pretty good. This is the weekly chart. So you can see that some tech is lagging, but the healthcare sector seems to be doing better. If we look at the utilities, utilities are also improving. Here we go, pretty close to all-time highs. Then let's take a consumer discretionary. So the consumer discretionary is the one which is actually struggling. When we had marked this a pattern formation right here, which is a pretty strong resistance level, the market came very close to it. Did not meet our mark exactly, but the high was 194.79, and we had 78.6% retracement on 196. Is just close enough. and was weekly chart closing on this negative, taking out the prior week's low. So there you go. And we saw a pretty good 1 month correction, and now it is testing the bottom of the channel and moving in this channel right here. So I think a lot of work needs to be done for this one, and consumer discretionary seems to be the one which is lagging at the moment. Now let's take a look at the consumer staples. Again, look, it's really strong, making new all-time highs. Then let's take a look at the materials. This is something really interesting, guys. So materials will include, I would imagine it will include base metal stocks as well, perhaps. So here I think it has the potential to reach maybe 98. So again, a rotational aspect in the marketplace that I was talking about. We can see a number of things happening here, breaking to new all-time highs in the materials. Let's take a look at some of the other real estate. Here we go. So the real estate one has struggled a fair amount. Look at this, where it was in 2021, putting in some sort of a bottom around November of 2023. So moving higher though, but really interesting is that it's also completing an ABCD, really close to that. And then in terms of the retracement, ooh la la, right at the 61.8% retracement. So guys, this is a pattern which is it could be a pretty good amount of resistance if the market actually find, yeah, there's a possibility market could find pretty good amount of resistance right here, and then at least we could see some sort of a correction similar to this. If it will indeed be a correction, then I think what we'll have to watch is like a trend line like this, and if that gets broken to the downside, boom, it could actually come in and it could move into this region right here. Boom, there we go. So all depends upon this resistance level. Then if this on the downside, if it breaks to the downside, this trend line gets broken, boom, we could come and test right into this box. So let's take a look at yeah, let's also take a look at the Bitcoin. Okay, I'm gonna move down to, so one of the things about the Bitcoin is, here we go, it's just a trading range affair. Really important. The key part is that it does not break below on a closing basis on weekly chart below the 38.2% retracement. So far it hasn't done that, so that's good. On the daily chart you can see that it's just been in a trading range since March of 2024, and I had done a video about the Lucas time spiral, and that's like a secret unknown cycle which is operating in the Bitcoin. So please do watch that video. I'll try to put a link towards to it. But what the Lucas timing spiral is telling us, the month of September is really key. If the market is not able to break to new highs in September, then in my opinion, we move another 7 months and we move towards March 2025. So we could really have trading range behavior, but the timing is coming in the month of September. We should see a pretty good break in this Bitcoin. But what if it breaks to the downside? Then I think we still have to watch for the next 2025 March, April, because 7 months is a Lucas Lucas number. So you had March, you add 7, and then we have to go with another 7 plus 7 will be 14. So a really interesting video, please watch that. And you can see that the Bitcoin has gone just nowhere. We have had the introduction of the ETFs, many things, but this one is just going nowhere. And on the flip side, the gold has actually moved much higher. Let me actually try putting gold here. Okay, here we go. Oops, I think I did something wrong. This is not what I wanted. Okay. GC. Okay, I think I'm not just able to do it, um, but the gold has been actually much performing much better. In fact, it's one of the top performer at performing asset class in 2024 so far. So thank you very much for watching the video. Good luck, good trading, and if you like our technical analysis and you like this video, you found it of educational value, give it a thumbs up. And if you found our channel educational, you learned something, please do subscribe to it. And if you do, also hit that bell icon button. That way you will know when the new videos are posted and you will not miss anything. Thanks. So with that, I'll leave you. Thank you very much. Good luck, good trading, and speak to you guys soon.